Hi. In today's class, we will learn how to work out the step 3 in a fund flow statement. That is the fund flow statement itself. Just like my step 1 and step 2, I have also kept guidelines for step 3 to ensure that your fund flow statement is flawless. So let's look at the guidelines of this step 3. Just like the first two steps, I've kept 4 guidelines for this step as well. The first guideline is the answer of step 1. This is the schedule of changes in working capital. Now, if you get an increase in working capital, then that becomes an application. And if you get a decrease in working capital, then that becomes a source. Next guideline is step 2, which is adjusted P&L account. Now, if you get a balancing figure as funds from operation, then this becomes a source. But if you get funds lost in operation, then it becomes an application. Next is when you look at your adjustments for any direct entries, such as dividend paid, which we know is an application, or interest received, which we know is a source. Apart from that, we also look at our working notes. In our working notes, we search for any cash or bank account because this will indicate either a cash outflow or cash inflow. And the last guideline is where we look at all the non-current items that we haven't treated so far or in the first two steps. So let's move on and look at the sum. So in my previous video, I had finished step 2, which is adjusted P&L account using the same problem. So we're going to work out the same problem for step 3 as well. So let me show you the answers of step 1 and step 2. The step 1 schedule of changes in working capital is giving a decrease in working capital of 13,000. The step 2 adjusted P&L account is giving us a funds from operation of 1,70,500. And these are the working notes that we have to prepare based on the adjustments that were mentioned. So let's quickly go through the adjustments once. The first adjustment, dividend paid of rupees 42,000, we did not have to prepare a working note for this because we only had to remember that it comes in two places. One, as a non-operating expense under adjusted P&L account, and two, as an application under funds flow statement. The next adjustment, assets of another company were purchased for consideration of rupees 50,000 payable by issue of shares. These assets were land and building and stock. Now we all know that a transaction having two non-current items will not lead to flow of fund. Same goes with a transaction having two current items. But in this transaction, we have shares issued in return for assets. Now, shares issued in return for assets such as land and building will not lead to any flow of fund because both are non-current items. But shares issued in return for assets such as stock, which is a current item, will definitely lead to flow of fund. So when we mention issue of shares, we'll have to mention the amount to the extent of stock. The next guideline, depreciation written off on machinery and land and building. So because such adjustment is given, we have prepared a working note for machinery and land and building to take a note of these changes. Also, there is loss on sale of machinery, which is written off to general reserve. Tax paid 35,000. For this, we prepared a provision for tax account to find out what will be the provision for tax made at the end of the year. And lastly, any new additions to land and building were also considered in the land and building working note. So let's look at the format of the fund flow statement, which is our last step. Fund flow statement is in a T format where you have sources on one side and application on the other side. Any point you are getting funds, there is funds inflow that comes under sources. And any point you're paying funds or there is outflow of funds, then that will come under applications. So let's look at our guidelines again and start working out this step. The first guideline is where we look at the answer of step 1. In step 1, the answer that we got was decrease in working capital. So this decrease in working capital is a source of fund. Hence, under sources, mention decrease in working capital. Amount 13,000. Next guideline, the answer of step 2. Step 2, which is adjusted P&L account, showed us the balancing figure as funds from operation, which is a source. So under sources, write down funds from operation, amount 1,70,500. Back to the guidelines. Now, first we look at the adjustments for any direct entries. The first adjustment, dividend paid, can just be a direct entry. We don't really need to prepare a working note for this. So dividend paid is an application. Under applications, mention dividend paid, 42,000. Next, if you notice the other adjustments, we've more or less prepared a working notes with this, that is the machinery, land and building, and provision for tax. Of course, the issue of shares in return for assets, we haven't prepared a working note, but we need to remember when there is an issue of share, you just need to take the value to the extent of stock alone, which leads to flow of funds. So we'll get back to this a little later. Now that we've looked at the adjustments, let's look at our working notes and look for the word cash account, because this will indicate if there is an inflow or outflow of cash. Starting with the first working note, which is land and building. Here we have a to cash account, which indicates a purchase in an asset. Purchase is an application. So under applications, write down purchase of land and building, amount 37,500. Next, in the second working note for machinery, we have a buy cash, which indicates sale. This will come under source, sale of machinery, amount 26,000. Moving on to the last working note, provision for tax, we have a to cash account, which is an application because it's tax paid. So under applications, mention tax paid, amount 35,000. So with this, we've completed the third guideline where we looked at our adjustments and working notes. Moving on to the last guideline, where we look at all the other non-current items that haven't been treated so far. That means if there wasn't any adjustment in relation to this non-current item, or we did not prepare any working note, then we look into this. Now, before that, we need to remember the second adjustment where shares were issued. Now, shares issued to the extent of land and building, wherein both are non-current items, will not lead to flow of fund. But the shares issued to the extent of stock will lead to flow of funds. So when we look at the non-current items, starting with non-current liabilities, share capital shows an increase of 50,000. Now, normally an increase in share capital means that there has been an issue of share capital. Here we need to remember the issue only to the extent of stock value will be considered, as this will lead to flow of fund. So under source, because when you issue, you're getting cash, you're getting funds. Under source, write down issue of share capital. Now here, I'm going to write it in brackets that we are only going to take the value of stock, which is 25,000. Moving on, reserves and surplus is normally taken care of in the step 2. So we don't have to worry about it right now. Then we have loan. Loan value from 1,60,000 is reducing to 40,000. That means there has been repayment of loan. Therefore, this is an application. Under application, write down loan repaid, the difference amount 1,00,000 20,000. Apart from this, we move on to the non-current assets, but we only have tangible assets as non-current assets over here. And we have prepared working notes for both the tangible assets, which is in note number 2, land and building and machinery. That means we've taken care of the changes in these assets based on the third guideline. That means we have completed our 4 guidelines. So like I told you, once you've completed your 4 guidelines, you will ensure that your fund flow statement is flawless. That means your fund flow statement will tally. If you notice, both the sides show the same total. So this is how you need to rely on such guidelines in order to ensure that you don't make any errors or mistakes while preparing the fund flow statement. Thank you.